Welcome back. Sologenic is a trading ecosystem that can connect the global financial markets with crypto. And with me is a co-creator of this system, Bob Raz, all the way from Spain. So great to talk to you this morning, Bob.
Hi, Jane. Thanks for having me on your show today.
Thanks. So let's start with decentralized financing that's getting a lot of buzz right now. Explain how Sologenic is a DeFi entity.
Absolutely. As you mentioned, decentralized finance is booming right now and definitely has the potential to change the future of economy. But the main question is, how do governments feel about that? Well, as we know, regulations are the key for any industry to grow. For that reason, we have designed a hybrid DeFi model, which us, as the centralized party, are only involved in KYC and fiat on and off ramping. Further on, we are adding smart contract functionality, which that will bring more aspects of DeFi, such as escrow, lending, and etc. for tokenized assets.
Okay, and then you mentioned the tokenization, and Sologenic facilitates the tokenizing of 40,000 stocks, ETFs, commodities as well. How does all that work, and what are the advantages to the tokenization?
That's actually a great question. Once an asset is tokenized, it brings many different benefits for the users. For example, users can withdraw these tokenized assets and transfer these assets to their own private wallets. So basically, they can have self-custody of these assets without involvement of a third party. Or they can trade these tokenized assets 24/7 on the DEX without the limitation of traditional market hours. The other benefit is users, they can spend these tokenized assets through Solo cards, which basically it works as ordinary credit cards, and users, they can use these Solo cards anywhere in the world to spend these tokenized assets. As mentioned before, we are adding a smart contract functionality, which that creates limitless opportunities for users through DeFi.
Mm-hmm. Okay, I mean, it really opens up a whole new world of finance, which is fascinating. And now, how do the dividends work? Because there are dividends with tokenized assets as well, right?
Yeah, correct. We actually, when we have designed the whole ecosystem, we try to make this as simple as possible. The way it works, the ecosystem scans and detects all the wallet addresses that they hold that specific tokenized assets and deposit dividends in real time into those wallet addresses.
Okay, and then we've had a lot of highly publicized stock splits this year. There's been Apple, Tesla has split. Yeah. How does Sologenic's ecosystem handle a stock split?
Yes, in terms of a stock split, Sologenic notifies the holder of those tokenized assets and provides a 30-day token swap period. During this period, users can swap their existing tokenized assets with the new one.
Now, you touched a little bit on regulation, and I know this is a really crazy area. A lot of governments are still trying to figure it out. It's very fast changing. I mean, how are you handling that? What have been the challenges involved with dealing with government regulation?
Actually, the way that we look at regulations, probably many people, they have the same point of view. We see regulations as a factor that brings value and transparency to any industry in a long term. In terms of Sologenic, we have applied for MiFID investment firm license inside EU, which this license gives us the opportunity to offer the trading of securities to our users. Mm-hmm. In the meanwhile, we're currently considering to obtain a secondary license, a secondary brokerage license in other offshore jurisdictions, so we can serve a wider range of countries.
Mm-hmm. And I also noticed on the website that Sologenic allows you to tokenize even a fraction of a stock. So explain how that works. And then would this be something that would open up finance to people that have been kind of shut out of it before because they didn't have the money to invest?
Yeah, for sure. That's actually my favorite part of Sologenic ecosystem. So we have introduced a new type of order. It's called pool order. The way it exactly works, users can contribute any amount to the pool, and the system will execute the order as soon as the amount reaches to one. For example, I give you an example. Today, let's say the price of Tesla is $500, and there are a bunch of users, let's say 100 users that they're willing to put down. They're willing to put down anything from $1 to $500 into the pool. As soon as the pool amount reaches to the value of one Tesla stock, which is $500, the system will execute the order and will tokenize this asset, and will basically divide the token between all the users who have participated in the pool order.
Okay. I mean, it's a fascinating application of tokenization that we're going to be able to open this up to people that have been excluded before.
Yes, hopefully very soon in US. Unfortunately, at this moment, it's not going to be available inside US, but we are working on it. So
okay.
hopefully very soon.
Okay. Great. Sounds like a very interesting concept, and I wish you the best of luck. Thank you so much, Bob, for joining us.
Perfect. Thank you very much, Jane.
Thank you.